everyone, and welcome to another episode of Small Caps. My name is Jess Holland, and I am your host for today. Today, I have the absolute pleasure of welcoming Matt, who is the Managing Director of West Cobar Metals. The ticker code is WC1. Welcome, Matt.
Hi, Jess. Thanks for having me.
Thanks for joining us. Okay, right. So let's just delve straight in. Just to give everyone sort of a general overview, let's talk about your flagship Western Australian Salazar project. So first of all, can you explain to our viewers the significance of the almost fourfold, that's 4 times, resource increase at Salazar Rare Earths project?
Yeah, absolutely. It's something we've been working on for a number of months, and it's a real milestone moment for us. So, when we acquired the Salazar project about a year ago, it had a 44 million tonne resource on it on Newmont, and we've been busy drilling that out earlier this year and really working on upgrading the resource. And it's a fantastic outcome. We were we're just finalising the resource early this week and announced it sort of yesterday, and it was a really exciting moment for us. The total number's gone up more than 4 times. We're now looking at 190 million tonnes at 1172 ppm, which is a very high grade. And that, the interesting part of that involves an upgrade to Newmont, which was the original resource, and also OConnor, which is in our second tenement just to the south. So we've actually now got resources across both those deposits, and still a lot of potential to grow that as well.
Well, firstly, congratulations. That is huge. Massive congratulations. But for our audience who don't know what rare earths are, now we know that the Biden administration has labeled rare earths as a critical mineral. But can you explain to our audience, why are rare earths so important, and what are the applications in the market for rare earths?
Yeah, look, rare earths, it seems like it's hard to hide from the relevance of rare earths. It's getting a lot of press at the moment, and I think, it's only going to increase going forward. Rare earths are considered a critical mineral, and they're really a key part of the decarbonisation story around the world. So, as the world moves away from fossil fuels and electrifies its energy, one of the things that you need more of is minerals to enable that electrification. And rare earths are a real key part of that story. They have a lot of applications throughout products like electric vehicles, and in particular the magnets that go into electric vehicles. So rare earths are very, very important in the magnets that basically drive the electrification of the economy around the world. And what's really interesting is there's a mix of elements that are considered rare earths. We tend to focus on NdPr and dysprosium and terbium. They're kind of grouped into 2 groups, what we call the lights and the heavies. They have a range of different prices, and the heavies, the dysprosium and the terbium, are a lot more valuable. We're quite lucky in our deposit. We have a slightly higher proportion of the heavies than some of the other deposits around. And that means, we have a higher basket price in general. But I guess going back to your question, there's a fundamental demand supply gap appearing with rare earths around the world.
Like a lot of other minerals that are required,
Like a lot of.
Yeah.
100%. And depending on what you believe the forecast for electrification of economies around the world is, that gap, can be seen as massive going forward. And part of the challenge is that rare earths have predominantly been produced out of China historically. China's been by far the biggest producer and by far the biggest processor of rare earths. What's happening recently with the geopolitical pressures is that, basically the Western world is looking to shore up its own supply sources and its own supply chains in rare earths. And that's where, countries like Australia are very well placed to benefit from that drive.
Absolutely. Yeah, thanks, Matt. Now, let's move on to the details of the resource. Okay, so can you please elaborate for our viewers on the characteristics of the Salazar clay-hosted rare earths project, and also why this project is in particular a noteworthy one?
Yeah, so I guess going back to the numbers that we've got, they're big numbers. It's one of the bigger rare earth resources in Australia. It's among the bigger ones on the ASX as well. So we're very happy with the overall numbers, and I guess with in rare earths at a very high level, you've kind of got the hard rock rare earths and you've got the clay rare earths, and we're talking about clay rare earths here at Salazar. That's quite a different proposition to the hard rock, and typically Australia's had a history of hard rock rare earth companies, and there's some great success stories there. But the clays are a slightly new concept for Australia, and basically what we see as our advantages are, we're a bit lower cost, we're substantially lower capex, and we're lower opex as well, because you don't need to set up a lot of the infrastructure you do for that you would for hard rock mining, and essentially that's one of the key advantages. It's easier to dig up. We don't have to mill and crush it, and it's you really just have to leach out the rare earths through the solution, and then it's the case of how much do you want to process and refine those rare earths into an end product, and that's a challenge that's evolving for the industry as well. But one of the characteristics for our clay rare earth project is the fact that we see it as a lower cost proposition than certainly the hard rock options out there.
Okay, fantastic. So you mentioned just before in terms of the resource, the numbers there, but can you discuss the significance of the indicated and inferred resource that you found?
Yeah, I think what's really interesting is that we've come up with a resource that is very substantial. If you put it into a mine life perspective, 190 million tons will get you a very long mine life at a very decent production rate. So, it's probably it's more than enough to start thinking about mining, and certainly, we also see a lot of upside potential. There's the tenements that we're in and that region that we're in has a lot of upside potential as well. So, for us, we one of the key things we wanted to do was increase the overall tonnage, and we've done that significantly. But importantly, we've maintained the grade, and I think the grade is one of the key things in rare earth clays. It basically boils down to economics, and the higher the grade you can get through the front end, and the cheaper you can beneficiate that up through the process, the better off you'll be and the lower you'll be on the cost curve. And so for us, it wasn't about just chasing any tons. It was about chasing the high grade tons. And I think we've ended up with an outcome that we're very happy with.
Right. So you mentioned sort of potential blue sky potential. Now, is there potential for further resource upgrades of this project?
Absolutely, absolutely. There is. We sort of again, we started with Newmont, and that's been the deposit that's had the most work on it historically, and so we've focused on that. And it's quite a unique beast, Newmont, and I'll mention that a little bit later. But we saw good potential to extend the resource there, and there still remains potential to extend the resource there. And then we had a look at O'Connor, which is in the southern tenement, and we've really focused on what we saw as the sort of initial part of it. But there's massive potential to go further at O'Connor. Now, that's the two tenements that we have focused on initially, but we've also got a third tenement, the Lanthanos tenement, which is an even bigger land area, and that's about 520 square kilometres, and that's unexplored at this stage. But we believe it's prospective, for having similar deposits perhaps to O'Connor. Now, a lot of work needs to be done to prove whether that's there or not. But nonetheless, the potential remains. And for us, it's a challenge of, where are we best off allocating our cash? Do we go and drill for more resources and bigger numbers? Do we focus on the network? Is it a combination of the two? And that's the discussions we're having at the moment. But in terms of getting resources up, there's certainly a lot of potential within our current tenements.
Okay, brilliant. So now we've already sort of made a segue into your other projects, also based in WA, which is, your Newmont and your O'Connor tenements. So let's kind of just get a little bit more specific. So how have Newmont's resources specifically changed, and what are the implications of that upgrade?
Yeah, so Newmont's a really exciting one for us. As I mentioned, it's slightly different in the mineralogy than the others in the area.
Okay.
And what we've been really happy about is the upgrade of 39 million tons from inferred into indicated. So that's and basically it shows an increase in the confidence level of that resource.
Brilliant.
So inferred is kind of the initial stage, and then indicated gets to a point where you start to really be able to work off, okay, what's my pathway for development based on this indicated. That's sort of, the next level of confidence, and that's something we're very happy about. It means that the drilling density is higher in that area, and we have a high level of confidence of that grade and that tonnage. So importantly, 39 million tons of Newmont is indicated, which is slightly unique. And we've also increased the total inferred and indicated to 83 million tons. So, pretty much, almost a doubling of Newmont based on where we had it at the 43 before.
Sure. So you've had a 4 times increase at Salazar, and you've got, almost double at Newmont. So now what about OConnor? Can you explain to us, the maiden inferred resource there?
Yeah, OConnor's really interesting. It's in our second tenement just south of Newmont, and I guess we see Newmont as the logical starting place because most of the work has been done on Newmont in terms of drilling and met and everything else. But it's sort of, as we're starting to look at OConnor, we kind of went, hang on, there's a big area here that looks like it's very interesting. And so through this drilling campaign, we went and drilled it out and found fantastic intercepts of high grade rare earths, and really became an obvious one for us to look at putting a resource around. And importantly, this is just the first pass at OConnor. So you could drill and infill and extend OConnor quite substantially. But we've ended up with 107 million tons at 1216 ppm, and that's a fantastic outcome. I don't think we're necessarily chasing too much bigger at this point. That's a very substantial resource.
Absolutely. Now, you did mention the Lanthanos Project. Am I pronouncing that properly?
Yes.
Yeah. So how do you see the possibility of exploration at the Lanthanos Project impacting future projects?
I think Lanthanos is the big blue sky area for us. We see interesting geology there, and we see a lot of potential and a very big land holding. So it's the natural sort of place for us to step out and look for additional tons. Okay. And we'll put together a plan for that over the coming months. But as I said, primary focus, Newmont's the most advanced, OConnor's secondary, and Lanthanos is kind of the blue sky exploration potential.
Okay, brilliant. Now I have another question, which is a little bit of a mouthful, so I hope I'm going to pronounce all of these things correctly. But can you discuss the low levels of deleterious radioactive elements, uranium and thorium, and the significance of them not being concentrated during the extraction process?
Yeah, absolutely. Uranium and thorium can be associated with rare earth deposits, and when you concentrate the rare earths to get it into a product, sometimes these elements that you don't want concentrated end up being higher levels as well. So what we've found with Newmont is we're quite lucky in that the radioactive elements, uranium and thorium, actually don't really concentrate up, which is a great outcome. It means when you're dealing with an end product, you don't have all the issues dealing with a radioactive end product, which makes it a lot harder, obviously add costs and all sorts of extra considerations. So again, Newmont's slightly unique in terms of what we found with our met, that radioactive stuff doesn't upgrade.
Fantastic. That's great. So now we know WA is, rated as, one of the Fraser Institute's top mining jurisdictions globally, again, consecutively for over many years. But can you tell us about the land and also your tenements, and the location? Is this a good place to develop a project?
As you said, WA is one of the best jurisdictions in the world, and certainly that's kind of its feedback globally in terms of where we sit with transparency, regulation, community engagement. We're very lucky here in WA, and I guess where we are with Salazar is a particularly interesting spot because we're about 120 k's northeast of Esperance, and Esperance is a fantastic regional centre. There's really capable, skilled workforce down there. There's really good infrastructure. There's roads, there's rail, there's a great port. It's a really, really good area to be. And then, on top of that, we're in undeveloped state land. So the benefit of that is, it's actually a relatively straightforward process to do work on that ground. And, I guess we don't really have sort of landholders that we have to engage with. We certainly engage with the heritage groups, and they're our key stakeholders there.
Native title.
But in terms of sort of having to deal with farmland and cropping and that sort of stuff, we're quite lucky. We don't have any of that in our tenements.
Yeah, fantastic. Okay, so now looking at, future prospects and development for West Cobar, how does this major upgrade align with the company's, future goals or long-term goals, and what are the next steps in terms of the development process?
Yeah, we've reached this milestone with this sort of very substantial resource, high grade, and we're really just going through some of those forward plans now. And I think one of the key things for us is this indicated resource at Newmont allows us to sort of start thinking about, okay, what are the pathways here to push this towards development? And, with the confidence of that resource, we're going to do a lot of internal sort of planning about the best way to take this forward. And the options, there's quite a few options for us going forward in terms of scale, in terms of potential co-products in there as well. And, I think we haven't landed on a definitive sort of journey yet, but that's the discussion we're having at the moment.
Okay, so now just sort of shifting gear from WA, let's talk about West Cobar's other projects that you have. So, West Cobar has obviously a number of other really exciting projects in its portfolio. And so can you just provide an overview of these for us?
Yeah, it's, we wanted to position West Cobar as exposure to the critical mineral theme. And, we've got a number of projects that I think dovetail really well with our rare earth cornerstone project at Salazar. So we're playing the rare earth thematic, and we've got a great project there. But, the additional sort of spice in our portfolio is the exploration potential that we have, and we're focused particularly on lithium in two places in the world. We've got some exploration acreage in the Northern Territory, which is very early stage, and, the program there involves field mapping and, soil sampling and getting an idea of where we can look for lithium there. We do think the geology is interesting and the land holding is very big, but it's early stage. So that's something that we're working on in the background. The other one that's very interesting is Nevada. That's over in the USA, looking at lithium in clays. So, a similar theme to what we're doing here with rare earth in clays. It's that similar kind of deposit style, but we're looking for lithium in Nevada, and we know we're in a good neighborhood in Nevada. We've staked some ground surrounded by some very big American and Canadian players. They're all finding very good lithium intercepts and content in their ground and putting together massive resources of lithium clays, basically around us in Nevada. So that's, an early stage project, but does have good potential, and we're really keen to test that and get after it. So we're in the process of finalizing next steps for that. And, one of the things for us there is to go and drill that out and test the concept of the lithium in clays. It's interesting in being located in Nevada. You're sort of just down the road from some of those, the gigafactories, for example, Tesla, and those guys are producing batteries, and they need feedstock. So, if we were lucky enough to find some good lithium there, then that'll be a fantastic outcome, in a region that really wants it. and importantly, supported by the Inflation Reduction Act in the US, which is all about shoring up the US's capability to supply its own critical minerals.
Yeah, so I did read somewhere that you guys were just sort of finalizing your permitting with the Bureau of Land Management over there in Nevada. And again, a really, really, fantastic mining jurisdiction. Nevada was rated #1 in the Fraser Institute last year. So, you guys have obviously picked some very good locations for your project. So that's great.
Yeah,
now,
I think so.
So just in terms of kind of rounding that all out, what is the common theme of your projects, and what are the real value catalysts?
Yeah, I think we see the theme as being the critical mineral theme. So we've got advanced rare earth project, which is exposed to the rare earth thematic. We've got some lithium exploration. So there's catalysts on both those angles. Where with the rare earths, it's more about sort of working towards commerciality of the project. With the lithium, it's more about the exploration results and finding the lithium that we think is there. We're well positioned with both of those, and I think those are the real near-term catalysts, both milestones on activity on those projects. One thing I didn't mention just before was we also have some New South Wales projects that have copper potential. So we're sort of working them in the background as well, and they're all all those things have potential to be fantastic value catalysts as we progress them, and we're busy pushing on all those fronts.
Amazing. Now I have just a couple more questions for you, Matt. Firstly, is there anything that you would like, or anything else that you would like to share with our small caps audience about, the Salazar project or West Cobar Metals, or that anything else that you think that our viewers need to take away?
I think just something I've alluded to earlier in terms of Salazar. When we picked it up, it had already had a number of years of really good technical work done on it. So we feel like the project's quite advanced with the MET studies and the various I guess the knowledge that we've picked up with that and we've built on. I think one thing that we're going to have a look at internally is the co-product potential. With Newmont, we've got a pretty unique mineralogy there. It sits over an amphibolite unit, so that just means the geology is slightly different with Newmont than some of the areas around us. And there is potential for co-products. So what I'm keen to understand is, does it make sense for us to produce the rare earths, ultimately produce the rare earths with some of these other high value co-products that we've seen in the Newmont deposit, and there's things like scandium, titanium,
right.
So some high value sort of minerals.
Yeah.
And we're just having a think about that. It might be a really interesting addition to the overall basket at Newmont.
Absolutely. Now, what sort of message would you like to convey to our audience in terms of, for those who are really interested in rare earths elements? What is the sort of final overarching message that you would like to share with our viewers today?
I think, we've seen NdPr prices dropping over the last year. So that's sort of the rare earth, we look at these indexes of rare earth prices, they've come down significantly over the last year. So, I think that means ourselves and our peers' share prices have gone down and valuations have gone down, and it's a fact of the market. But I think like all commodities, and particularly even more so in rare earths, when it turns, it could be a really interesting sector to be in, and we believe that is going to happen in the near term. So, we think our rare earth project provides really good exposure to that rare earth thematic. It's an interesting proposition in terms of where the economics will sit, and we're sitting at a 10 million market cap with a really nice project. It feels like there's good leverage there. I think what I'd also like to say is the macro for rare earths and lithium is very strong and expected to get stronger as the world moves to further electrification. So again, I think we're playing in a sector where the macro tailwinds will be good for us. And if we deliver on some of the milestones with the rare earth project and, have a bit of luck finding the lithium that we want to find, then I think we'll be very well positioned to generate value for our shareholders.
I couldn't agree more, Matt. So yeah, congratulations. Well done. Thank you for your time today, Matt. And, everyone again, to our viewers, the ticker code is WC1. Go check it out. We really appreciate your time, Matt, and look forward to, watching your developments and hopefully having you back on again soon to share more.
Appreciate it, Jess. Thanks very much for the good questions.